Well, I'm delighted to be recording this interview at the Park Hyatt in Dubai with Yazmin Boden and Nick Jones from GSB. Welcome to you both.
Well, thank you, David. No, we're really excited to be here, so thank you for having us.
So, looking forward to seeing you at our networking dinner tomorrow night. Are you excited to be attending and back with PCD?
Very much so. I think there's a big turnout, a lot of people in the region, so really excited.
I hear Nick's got his best frock out as well for the occasion, so...
So looking forward to getting into a discussion about financial planning and debt advisory. But before we do that, it'd be great to have some quick introductions, starting with you, Yazmin.
Yeah, sure. So I won't bore you with War and Peace, but all of my career prior to Dubai was back in the UK. So started with St James's Place, then transferred to Tilney, and then finished up with Killick & Co in Mayfair. So lots of experience in terms of retirement planning, lifetime planning, tax and structuring, and also the investment management side is key as well as a little bit of trust and tax stuff. But I think the key thing for us is bringing that UK style and regulated financial offering independently to the international market, which is typically underserved. It's a bit of passion for me because I was born and raised in Dubai, so I've seen a lot of pitfalls, and ultimately we're here to try and iron that out.
Fantastic. And what about yourself, Nick?
So I unfortunately wasn't raised in Dubai. I'm from the UK, but I've been out here for about 2.5 years now. I started as a mortgage broker since I was a spotty teenager, watching my dad run a sort of property finance firm. And in the last couple of years, sort of veered off that path a bit more and focused a bit more on corporate finance and securities lending as well. So I've been at GSB now for 6 months and really getting settled in.
So GSB has got quite a unique proposition. I mean, perhaps, Justin, you could explain a little bit more about what's underneath the bonnet of the firm.
Yeah, absolutely. I think the great thing about GSB is that you've got a collection of, well, if I say so myself, really excellent experts, bringing all of that sort of expertise together to have that one-stop shop for everything in terms of wealth, private, trust, and of course debt is a big part of what we do as well. So that trust is a key thing, but also that independence. So when we build client solutions, we have a range of options at our fingertips to make sure we're going out to the market and picking the best solution for our clients, and then piecing that all together to create that holistic plan. I know holistic is not the best word in the world, but albeit I'm going to say the word holistic.
And if you look at the business now, we're sort of set across 3 pretty clear segments. So we have GSB Wealth, where Yazmin sits, and I'll not steal her thunder. We have GSB Private, where I sit, which is debt advisory, independent private banking through an external asset management model, and the third strand of the business being GSB Capital, so full-scale debt M&A advisory, typically for companies Series A and onwards.
Fantastic. And there's lots of interest in Dubai at the moment. It's in the wealth sector, I think it's one of the peak places that advisors are looking to come and work with collaboratively with professionals. They're seeing clients move here. I mean, what are you sensing on interest and demand for Dubai and relocation and all the bits that go with that, Nick?
Yeah, I think if you look at the global mobility nowadays has become much more simple. I think the region as a whole has been attracting professionals across a whole host of industries ever since its inception. And I think over the last sort of 3 or 4 or 5 years, you've really seen that stimulated, whether that's through the UK perhaps not being the most welcoming of environments or other jurisdictions. But the region itself is growing what seems like every other day. The roads are getting busier, people are sort of in offices. It's a really exciting time for the region, and long may it continue.
Fantastic. And from a financial planning perspective, high net worth relocators arrive in Dubai. What kind of things from a financial planning perspective do you start to explore with them and look at?
Yeah, that's a really good question. I think the most important thing that we do that we think is frequently overlooked is you need to start from the very beginning, understanding what the short, medium, long-term goals are, and then we can put together that sort of holistic lifetime financial plan piece. Now, once we have the long-term mapped out, we can then start to have good conversations or informed conversations about what that structure needs to look like, what that portfolio needs to look like, risk diversification. You need to keep it simple, particularly in the UAE. We're not burdened, a lot of us are not burdened by any tax considerations depending on the country that you're from, and we help with that as well. But ultimately, the key here is making sure you're keeping those costs low and that the portfolio is pulling in the direction of that financial plan that you set out. But it's fantastic working with individuals that do relocate to the UAE because for so many of us, we come from taxable jurisdictions. So you have this unique window where you can maximize your wealth and work more efficiently towards those goals in a shorter space of time without being hindered by...
Because they might not plan to be here forever, is it? It might be a 5-year, 10-year plan to be here as part of a role. I mean, what kind of do you see, or do you see people now making a plan to be here long term? I suppose it depends on a whole range of factors.
No, it absolutely does. I tell you what I typically see is people come to me and they tell me this is a 5-year stint. And then you realise on year 3 and 4 that you've got used to the convenience of Dubai, the beautiful sunshine, and we all seem to, as I say, develop that allergy to tax quite quickly. And then I see it extended. And I think because schools are now so much better here in the region, housing is much, well, I won't say much more affordable because we're seeing a little bit of a spike, but there's a greater supply of houses in the market and things like that, which makes the UAE a very viable place for families and single people alike to build careers and family life.
And I guess it's a great place to base yourself also if you're building business more broadly in the GCC. If you're going to Saudi, if you're going to other places, it's the natural sort of hub, isn't it, to build a life, but with the career opportunities of being in the GCC, you know?
Absolutely, yeah. If you're looking for some sense of home, I guess the UAE, because there is quite a big Western presence, for example, is a great place to do that. But there are fantastic opportunities now. Saudi, Bahrain, we even think Qatar, you know, there's a lot of wealth in Qatar. But you're right, Dubai is a great base. And I have a lot of clients actually that have very significant roles in Saudi, but keep Dubai or Abu Dhabi weekend homes as per se. So yeah, absolutely.
And Nick, for those high net worths moving here and relocating, there'll be a whole range of things that they're looking at, one of which would no doubt be getting set up in a property, whether they're initially coming and renting, but inevitably they will look to buy at some point. I mean, do you do a lot of property financing, or what sort of things do you do with that new inbound client?
Yeah, we see a lot of inquiries for be it high net worth individuals, ultra high net worth individuals moving to the region and looking to acquire properties, real estate, whether that's commercial, residential. I think for us, we're uniquely positioned in the sense that we're not limited to exclusively property finance from a sort of proposition stance. You know, we have the ability to look at a client's asset profile and say, how is it comprised? Are there properties we need to leverage? Are there securities? Are there corporates? Is there anything esoteric in the background that we can use to leverage across multiple jurisdictions? So we see a lot of clients moving in here, and local mortgages are, for the moment, fairly tick boxy in terms of the sort of criteria you have to meet.
So an entrepreneur coming from abroad might not fit criteria there, even with they've got a big asset base in the background.
Exactly, but what we could do, as opposed to using sort of local lenders on the ground, we can use alternative ones for assets that are held overseas to use that cash to then sort of purchase a property out in Dubai.
So on that Lombard lending point, perhaps you could just explain a little bit, for those less familiar, how that tends to work.
So Lombard lending is effectively leveraging investments, be that a diversified portfolio or a single stock or crypto or any sort of other form of illiquid holding. And that investment is used for security for a loan.
It might be constrained by the loan to value of the portfolio, or might be a bit more expensive, but it allows some flexibility, doesn't it? It allows the entrepreneurial client to be a bit more nimble, perhaps.
Yeah, exactly. I mean, from a sort of a flexibility stance, it's much more, it's much easier to sort of facilitate, can be arranged quicker. A lot of times the interest rates and the terms available will be more competitive than what they would be against alternative assets. And, you know, we can sort of leverage a whole host of investments across most exchanges on the planet. So fairly widespread in that space.
Great. And on the structuring piece, you know, if the client, the inbound client, looking at their asset base, they might have pensions in the background, other structures already in place. How do you go about like looking at a review of how they might invest when they're here?
Yeah, you've got to look at everything. And I think just off the back of the most recent UK budget, sweeping changes, but you know, we say UK because, you know, Brits in the room, but actually we have a range of international clients. So on the structuring piece, it's first understanding where that person is from, what that looks like for them in terms of double taxation agreement now they're here, but also understanding what's next. Because a lot of the time you might not retire in the UAE. It's quite expensive, particularly from a medical insurance front. So we have a lot of clients that go back to Europe, for example. So you've got to look at it in 3 stages, understand the tax implication of each, but also adapt to any emerging legislation that we've seen. For example, UK pensions are looking like they're now going to be within our taxable estate upon death. So there's a conversation there, particularly for people in the UAE. We've got this double taxation agreement where you can potentially withdraw your UK pension, pay no income tax, then we can restructure now offshore to make sure it doesn't fit into that or fall into that UK inheritance tax trap now. So there's so much to look at, and it's a completely different kettle of fish from when I sat in the UK and was tax and structural planning from there. But I think the key message is make sure you understand the cost of your structure fully, particularly in this market. You do see some hidden pitfalls which are unfortunate. So yeah, cost is key. Keep it low, minimize tax. That's going to put you in the best position to maximize that growth. But again, looking at it, that full picture again, and understanding how that structure should change over time.
And I guess pensions, for a UK-based person, they might have accumulated some quite substantial pension, but often it's an area of housekeeping that people are either unclear of because they've got different schemes and different arrangements. Do you find that just unpacking and untangling pension arrangements is quite a high area of value, even for a high net worth, ultra high net worth client?
Oh, massive, yeah, because a lot of the times we see amazingly sized pension, and a lot of the time you're sort of auto-funneled into lifestyling funds, i.e. you're de-risked over time or your fixed interest allocation is upped. Now, actually, you need to specify or bespoke an investment mandate within a pension, particularly as you might not be able to touch it until you're 55, likely 57, and for those younger than us, potentially up until 60. So yeah, getting that investment mandate is key, and so many people don't understand actually what they have been also invested within. So revamping that, understanding the horizon, and then of course just navigating all the tax complexities that do come from pensions, because despite the changes that we've seen, UK pensions are still a very valuable tool. You're getting that gross roll-up in terms of capital gains tax and income tax. You're still getting that 25% tax-free allowance if you are going back to the UK, for example. We thought that was going to be hit. It wasn't. But of course, now you need to view your pension as part of the estate. So yeah, it's a complex area. And yeah, I'd say 30% of what we do is probably pension planning and helping people understand these fantastic assets that they have. Not even touched on the defined benefit pension side as well. But I don't think I'll bore you with that just yet.
And do you also see a role for straightforward insurance, the term, the whole of life policies? Because with changes in the budget, I think there will be an increasing role for people to use these policies tactically, aren't they? Do you anticipate more use of these type of contracts?
Absolutely. I think now that the inheritance tax angles from the UK have been restrained slightly further in terms of the pension, we're looking to gifting across your lifetime as the free and very easy way to be IHT efficient, albeit it needs to be done carefully to make sure you retain enough wealth within your estate to support your retirement first and your needs first. But the next thing is life assurance. So yeah, it's rerunning those calculations, pulling the pension value back into the estate if you are looking to retain that structure. The only slight sticking point we have over here, two aspects. Life assurance tends to be a little bit more expensive than it would be in the UK. You've got, a very developed market over there, albeit there's a cost-benefit analysis we help clients understand, i.e. this is what my beneficiaries will save, but this is what I'm going to be paying on a monthly or yearly basis to benefit from that life assurance. But life assurance is still the key tool. The only other thing is, again, in the UAE, you see some antiquated structures where they try and combine life assurance with an investment element. None of that. Keep it simple. You just want standalone life assurance to solve the needs that you're looking to be, whether or not that critical illness or inheritance tax, whatever that looks like. And then you keep your investment focus and your retirement planning very separate to that.
Okay, interesting. Nick, one of the things in the debt advisory piece is obviously cost of borrowing. In a cheap money environment, it's easy to sell more debt, but the picture now is much more complicated than it was a few years back. How do you see the economic environment? How's it impacting rates? What's your view on clients making decisions about where rates are at now and how they should utilise debt as part of an overall strategy?
Yeah, I think it's a good question. I think there's firstly, I think debt as part of an overall strategy, provided that it's structured in the most efficient manner and is sort of tailored to your circumstances. I think debt is a fantastic tool, and debt is a tool that you'll see some of our wealthiest clients using for liquidity and leverage. I think depending on the sort of the economy that you're referring to, I think interest rates have been historically quite high in comparison to recent years. Over the last sort of 36 months or so, we're now hopefully starting to see the sort of the back end of that, and rates are sort of torn between creeping down and sort of playing in that sort of middle space. But again, I think this is where there's a question to be said around what does the client's profile look like? Because it might be that they have assets in the UK and real estate in the UK, I should say, and you leverage that and you're going to be paying 6% a year, depending on your circumstances. Whereas if you have assets, for example, a mixed portfolio that we could leverage, you're going to be getting much better terms on that. So really I suppose the underlying point is, rather than just going for the most straightforward solution, what we're seeing nowadays is we have clients that, rather than creating this or sort of opting for this sort of off-the-shelf product, they're creating these bespoke facilities that meet their circumstances, because they're high net worth, they might be asset-rich cash pool, they might be prominent across a range of different jurisdictions. And I think just given the way that the world is going, people are sort of veering off the path so much they don't fit these sort of stereotypical boxes anymore. So, the ability to service that in whatever way we can is really important.
And lenders have different appetites, don't they? So working with a broad array of lenders across the spectrum, and also the alternative sources of finance. So it's not just, like you say, walking in for the most straightforward debt solution, but looking at the whole asset base, and then looking across the broadest universe of lenders and options, isn't it, to secure the right price in this market?
Exactly. I think independent advisory is becoming more important than it ever has been. I think we've seen cases whereby clients who on paper are high net worth, but as most of them are, they are high net worth, they're asset rich, but they don't necessarily have the most liquidity, or sort of on paper their incomes might not sort of meet affordability. But if you can understand that and you connect those clients with the correct lender for their circumstances, who can see the bigger picture, then there's often a solution to be had.
Because someone might have a long-standing private banking relationship with a bank, but they might not actually be able to offer them the most competitive or against the asset. If they want the financing on the yacht, then that's not, you've got to shop around.
Correct. So relationships are always very important in business, and that's not to be understated. I think there's something to be said nowadays about deliverability and working with people that you like working with, and that's one point. But we see it a lot of times where clients are loyal to their bank that they opened up 25, 30 years ago, who maybe in certain circumstances aren't the most loyal to them. And, just by taking an independent view and going elsewhere, we can save clients, have saved clients significant sums of money and reach much better terms just from having that oversight.
Okay. And Yazmin, you're involved in the investment piece as well, and how you deliver the investment strategy at GSB. Perhaps you could give us a flavour of how you help clients manage money.
Yeah, we have a very set way in-house of dealing with money management. It's something that myself and Stuart Ritchie kind of brought to GSB. In our experience, what the evidence tells us is that a lot of active managers do not outperform a passive mandate over time and consistently, and of course they charge really high fees for the privilege of that underperformance, albeit there's some fantastic active managers out there. Let's not get into that debate. And then we saw this movement where Vanguard sort of entered the market. Everyone was sort of looking to low-cost, well-diversified passive solutions. Now, we recognise there's a midpoint, so we sit in that sort of evolution of passive. So we look to 100 years' worth of evidence to understand, right, where are the areas of the market that consistently outperform? And so we create these portfolios that have this passive underpin, so you're getting a lot of diversification, you're keeping costs low, but you're tilting towards the areas of the market that have a 100-year track record of outperforming over time. Now, a lot of people say, why are you looking at historical data to make future investment decisions? But while the markets will never repeat themselves, there are patterns and there are rhythms in it. And ultimately, our investment performance is very, very strong. So the principles are quite simple, albeit there's a lot that goes on behind the scenes in terms of monitoring and things like that. But yeah, just having
for private clients, managing costs is actually really compounded. Is the picture?
I just couldn't agree more. So many clients come to me and they go, right, let's build a tech portfolio with Bitcoin and this, that, and the other. And I'm like, no. Let's take it back to basics here. First of all, what are we looking to achieve? What is the cost of this put together, and what are the tax exposures of you doing so? Something I so frequently see is people, particularly in this region, you're buying funds that are domiciled in the US. Well, you're opening yourself to US estate taxes where you invest more than $60,000 in a direct US equity, for example. So don't do that. Your beneficiaries are going to get hit. And a lot of the time, it's not until that death comes that difficult conversations are being had. But even just from an efficiency purpose, don't buy funds that are domiciled in the UK. Buy the same ones that are domiciled in Ireland to reduce your withholding tax. So there's so many layers and hidden pitfalls that people don't see from portfolio management that are the easy wins, i.e. costs and tax exposure will compound even more easily over time before you even looked at performance and what sort of assets that you want to be buying. So for us, it's keep it simple, keep costs low, understand the tax that you've got going on, and then follow the long-term evidence. Look, AI, we're seeing that all this year. Markets are incredibly efficient. I think it's increasingly difficult for people to actively make a good call on what is the next Amazon, what is the next, Nvidia is the common one at the moment. So buy the market, stick with it, have these tilts to drive that outperformance, and make sure that that's working in terms of that holistic plan.
Try and protect wealth, which you'd be making more wealth in another field, isn't it? You're not trying to also outperform as such on the portfolio that is your nest egg, isn't it?
Well, exactly. And also, a lot of people that move over here, 40s, late 30s, early 50s, well, you've got time and you've got a lot of tax-free earnings. Why are you taking on all this undue risk when I can hit the goals that you've told me about in a 60-40 portfolio? We don't have to do that. Or a balanced portfolio where we're being a little bit more diversified and cautious. So, yeah, keep it simple.
Is there a house on ESG and sustainable investing? I mean, what's your feel on that sort of area?
Massively so. It has to be done very carefully. So ESG investing and sort of taking an ESG approach to business as a whole is at the core of what Ross and Alison, our founders, believe in, and we believe in that too. The key with ESG investing, and it's something we experienced a year and a half ago, is we saw a lot of very popular fund management names get a big slap on the wrist from regulators because they went in and realised that they weren't being ESG or sustainable, or they weren't doing what they said on the tin. Now, the problem with that is clients that were holding those funds experienced a significant drop in value up into the realms of 30-40%, and it's still not recovered. So ESG is incredibly important. That's absolutely an overview that you should be taking in your portfolios, and we do that. But it's making sure you're doing that in the correct way and in an educated way.
And the level of conviction you have to that strategy, if you're actually out of pocket by it, it's really testing the commitment to it, isn't it?
Absolutely. And look, I invest in my own portfolios because I believe in it, and it's like that conviction and that research bit that's absolutely key.
Do you see at all ESG coming into the debt advisory side, Nick, in the sense of people trying to lenders making incentives for borrowers to be more ESG orientated, or that's still a very niche play in the overall market?
It's still a very niche space to play. I think there's a couple of lenders that will offer discounts for energy efficient properties and that sort of incentive. But on the whole, it's definitely in its infancy in the sort of debt space.
And we're coming to the end of this year. I think it's been fair to say a busy year in Dubai. Going into 25, the outlook, I think, is for more growth. Have you got any particular plans within the business? Are there things that are coming up that are of interest to our audience? What's in store next year, do you think?
There's some very exciting things going on at the moment, albeit I think we're sworn by secrecy.
Okay.
But look, already GSB, we have the exposure in Ireland and Europe. We've got our Irish and European office. The UK office is fully fledged. There's the UAE, and there's a couple of more global outreach spots that we've got going on. So keep an eye on us. But I think the biggest excitement for us this year has been the introduction of our in-house capital team. Some fantastic individuals from some very big names now sit under our roof. So that's going to be an area that we're definitely pushing and exploring further.
And that team is looking at private markets and other deals that are outside of the norm that the investors wouldn't be able to pick up. What gives a flavour of the sort of things they're working on? Sure.
So GSB Capital are doing big M&A mandates, debt, equity advisory, anything from sort of Series A onwards. So any sort of corporate finance within that realm.
Fantastic. Well, look, thank you so much for talking to me, and I really look forward to sharing this interview.
Oh, thank you,
Thanks
David.
for your time, David.
Yeah, it's been a pleasure.